Hello traders, welcome back to ComLucro. Today we're starting part 1 of a 3-video series where we break down 30 of the most powerful trading psychology lessons ever revealed in Market Wizards, written by Jack Schwager. If you've ever hovered over the buy or sell button with your heart racing, if fear, greed, or frustration have ever destroyed a perfectly good plan, you are not alone and you are not broken. Every trader has been there. The truth is, what separates elite traders from everyone else is not a secret strategy or a magic indicator. It is mindset, discipline, and risk control. Market Wizards is powerful because it reveals how the best traders in the world actually think, react, and survive across different market conditions. Across this series, we will extract the core lessons shared by legendary traders interviewed in Market Wizards. These are not theories. These are real principles used by traders who survived crashes, drawdowns, and uncertainty while building long-term consistency. Most traders obsess over entries and indicators, but the real foundation of profitability is behavior. Without the right mental framework, even the best strategy eventually fails. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the ComLucro community to support the channel and keep improving as a trader. Now let us explore the first 10 lessons drawn from the experiences of the Market Wizards themselves. Lesson 1. Capital preservation comes first. This lesson appears repeatedly in the mindset of traders like Paul Tudor Jones and Ed Seykota. Before thinking about profits, they think about survival. They understand that trading is not about winning big on one trade, but about staying alive long enough for an edge to compound. Every decision starts with the same question. What happens if this trade fails? When capital is protected, opportunities always come back. When capital is damaged, options disappear. This is why professional traders think defensively first. They know that one uncontrolled loss can erase months or years of progress. Preservation is not fear. It is respect for the game. Once you accept that your primary job is to protect capital, your entire approach to risk, sizing, and patience changes. Lesson 2. Accept being wrong quickly. Traders such as Bruce Kovner and Michael Marcus built their careers by understanding a simple truth. Being wrong is normal. What separates professionals from amateurs is how fast they admit it. The market does not reward stubbornness or ego. When a trade is not working, professionals exit without hesitation or emotional attachment. They do not argue with price or wait for validation. They understand that small losses are a cost of doing business. Holding on to losing trades in the hope of being right later is one of the most expensive habits a trader can develop. Speed of acceptance is a form of discipline, and discipline is what keeps losses small and manageable. Lesson 3. Risk defines the trade, not the entry. For traders like Larry Hite, the trade begins with risk, not with a signal. Before entering, they already know how much they are willing to lose and where they're wrong. Entry is secondary. This mindset removes emotional pressure because the worst-case scenario is already accepted. When risk is defined clearly, execution becomes mechanical instead of emotional. Traders who focus only on entries often feel stress during trades because the outcome feels uncertain. Professionals reduce that uncertainty by controlling position size and risk exposure. This is why two traders can take the same setup and experience completely different emotional states. Risk clarity creates mental clarity. Lesson 4. Discipline beats intelligence. Richard Dennis proved that discipline matters more than brilliance. He showed that traders do not fail because systems stop working, but because people stop following them. Discipline is what keeps you executing during drawdowns, after losses, and when confidence drops. Intelligence can create good ideas, But discipline is what allows those ideas to survive real market pressure. Many traders know what they should do, but fail to do it consistently. The difference between knowing and doing is discipline. Without it, even the best strategy becomes useless over time. Lesson 5. Confidence comes from risk control. For Stanley Druckenmiller, confidence does not come from predicting the market correctly. It comes from knowing that no single trade can seriously hurt him. When risk is controlled, hesitation disappears. Overthinking fades. Decisions become clear and calm. This type of confidence is not emotional or hopeful. It is structural. It is built into the process. Traders who rely on prediction for confidence feel strong only when they're winning. Traders who rely on risk control feel stable regardless of outcome. This is the kind of confidence that lasts through losing streaks and volatile markets. Lesson 6. Adapt or fail. Few traders represent this lesson better than George Soros. One of the strongest themes in Market Wizards is adaptability. Markets change constantly. Volatility expands and contracts. Trends appear and disappear. The traders who survive are not the ones who defend opinions, but the ones who adjust quickly when conditions shift. Professionals do not marry ideas. They test them against price. When the market proves them wrong, they adapt without hesitation. This flexibility protects capital and keeps them aligned with reality instead of ego. Rigidity feels safe, but in trading, it is dangerous. Adaptation is not weakness. It is survival intelligence. Lesson 7. Simplicity outperforms complexity. Many traders in the book, especially Ed Seykota, emphasize simplicity again and again. Simple systems are easier to execute under stress. They reduce hesitation, confusion, and emotional interference. Complexity may look impressive, but it often collapses in real time when decisions must be made quickly. Traders fail not because their ideas are too simple, but because they cannot execute them consistently. Simplicity creates clarity. Clarity creates consistency. And consistency is what allows an edge to express itself over hundreds of trades. Lesson 8. Emotional control is a skill, not a trait. One powerful insight from Market Wizards is that top traders are not emotionless. They feel fear, excitement, frustration, and doubt just like everyone else. The difference is that they do not let those emotions control their actions. Emotional control is trained through structure, preparation, and risk management. When risk is defined, emotions lose their power. When rules are clear, decisions become automatic. Traders who wait to feel confident before acting rarely execute well. Professionals act according to their plan, even when emotions are present. Control comes from behavior, not from feelings. Lesson 9. Consistency comes from process, not results. Across many interviews, traders explain that focusing on outcomes destroys consistency. Individual trades are random. What matters is repeating correct behavior. The best traders judge themselves by execution quality, not by profit or loss. When process is respected, results emerge naturally over time. This mindset removes emotional pressure from each trade. Wins do not inflate confidence. Losses do not destroy it. Each trade becomes one repetition inside a long series. This process-based thinking is what separates professionals from gamblers. Lesson 10. Humility keeps you alive. A common thread among market wizards is deep respect for the market. They understand that anything can happen at any time. This humility protects them from overconfidence, oversized positions, and ignored risk. Traders who believe they have figured out the market often stop managing risk properly. That is when damage occurs. Humility keeps traders open, alert, and cautious even after success. It reminds them that survival always comes before profit. In trading, arrogance is often followed by a painful lesson. Humility keeps you prepared for uncertainty instead of surprised by it. And with these 10 lessons, we close part 1 of our Market Wizards series. What you have seen here is not theory or motivation. These are mental frameworks tested by traders who operated through extreme volatility, deep drawdowns, and decades of changing market conditions. The common thread is clear. Consistency does not come from predicting the market. It comes from discipline, risk control, adaptability, and emotional awareness. In the next video, we will continue this journey and break down lessons 11 through 20. We will go deeper into topics like handling drawdowns, building conviction without ego, managing winning streaks, and understanding why patience is one of the most powerful edges a trader can develop. If you want to learn how the best traders think when pressure is highest, you will not want to miss the next part of this series. Please also remember that our mission here on the ComLucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology. Because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.